folks. Thanks for stopping by my daily market report. I am Mike, and sorry for the delay in getting this report out. I usually get this out in the morning here on the West Coast. However, I had some computer issues and just got my computer up and running here in the afternoon as the markets are basically about to close or has already closed. So something about this report is we mostly cover the mortgage rates and talk about what drives them and what is how they're moving in that day. We don't so much get into rate themselves as that can change for per person due to variable reasons, to loan programs, etc. So there's plenty of other sources you can get that. If you guys want rate quotes or so, please feel free to reach out. A little bit about myself is I am a lender. I work with a national lender. I'm a loan officer. I do work with a national lender, and I can certainly help you out with any rate quotes or getting you pre-approved to buy your next property, to refinances. We can get you set up there. If you got questions about mortgages, different programs, to again, about even where mortgage rates are going, please feel free to reach out. So without further ado, let's kind of get into the first part of this report, which is the economic reports. We'll start off with the durable goods that's being reported today, and this is for the month of February. So in January, we had 3.4% increase. However, forecast is supposed to show an increase of 0.8%. And for the first time in about 10 months, we actually had a decline. It dropped by 1.1%. Now, if you take out the big ticket items like transportation, which is going to skew the numbers, we had a 1.3% increase in the month of January. Forecast calling for a 0.6% increase, and it declined by 0.9%. So obviously not very good news there in terms of durable goods orders. Now we got the PMI or market IHS market PMI reports coming in here, and the first one is for the manufacturing sector. So anything above 50 on these indexes indicates growth. Anything below indicates obviously the opposite, which would be contraction. So the month of February we had 58.6. Forecast calling for 59.3. It didn't quite meet expectations, so kind of settled in between at 59 on there, flat. And then on the services industry, we saw 59.8 back in February. Forecast calling for 60. It came in right expectations. So we're still seeing some improvements here, which is good news. We had some inclement weather back in February. We saw some improvement. We're starting to see some economy reopening a bit here in the month of March. So this is kind of showing some of that improvement. We'll kind of have to watch and see as that continues, hopefully, to grow as the year continues to move on. So without further ado, let's jump overhead to the headline news, see what's moving the markets. Stocks ended up the day down. They closed down yesterday, and they continued to close down again today. We had Powell and Yellen, which is the Fed and the Treasury, testifying before the Senate committee today. This is a two-day meeting before Congress. Yesterday happened to be with House. Today was Senate. Nothing new to report in these terms. We also had a 5-year Treasury came in, which came in not great, but not bad either, just kind of in the middle, which kind of helped out a little bit things. The stocks have been taking its cue a lot, really, from yields. We've been seeing a big spike in yields a little bit. We've also been seeing lately also oil taking a drop, and then just today it jumped up 6%. So that kind of helped stocks in some ways as well. So depending on what stocks you're looking at, different sectors are doing a little bit better than others. So let's jump ahead to the mortgage-backed securities, see what mortgages are doing today. Yesterday we had a nice little rally. We actually had some price improvements, as you can see here, which is good news. We jumped up, I think, around 31 basis points. Today we're kind of settling in here about 5 basis points higher. We had some ups and downs here, as you can see here. But as of right now, we're up about 5 basis points. So depending on when the lenders came out, some price might be a little bit better or about the same. So for the most part, I would have to say, if you look at the closes here, and we're about to close now, that the pricing here is about the same as what we left off yesterday. So those who didn't give maybe price increases or price improvement yesterday, which I highly doubt anyone didn't, because it seems like I saw a long list of price improvements from pretty much about 30 different lenders. So that's pretty much right out there. We saw some improvement. So today should be pretty much about the same for the most part of what we saw in terms of pricing at the close yesterday. Here's yields. It came down a little bit, which is good news. And also good news is that this trend line here, this is something we want to keep an eye on. If we can stay below this, this could help push bond or treasuries even further down. We're right now at about 1.612. So 1.61. And if we can stay below this, that could really help out mortgage-backed securities and continue this improvement, or maybe even a correction, if we could even say that as well. So again, mortgage rates are approximately the same, or maybe even slightly better depending on the lender. But for the most part, I'll have to say unchanged from what we saw yesterday. All right, folks, you guys have a great rest of your day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye-bye.